This is your 9th program in the series on accounting. Accounting for payroll is a key part of the total accounting process, since it affects the legal and personal rights of all employees, and errors or omissions in this area may be considered serious by the employee, the government, and by the organization. Accounting. Regular employees who are under the continuous direction of an employer are paid wages or salaries in accordance with the understandings between the firm and the employee. Other persons may perform services such as an independent outside public accountant, attorney, plumber, or electrician, who perform specific services for a fee, which may be arranged for such services. Wage and salary are often used interchangeably, but if used differently, wage usually refers to labor compensation for skilled or unskilled hourly labor, while salary refers to compensation calculated on a monthly basis, usually for full-time administrative or professional services. What compensation would an outside attorney probably receive for a specific service? In addition to basic wages or salaries based on hourly or monthly rates, supplements such as incentive bonuses, commissions, piecework premiums, overtime, or profit sharing may be added to paychecks. Individual raises or reductions and general allowances for the cost of living or to meet labor contract provisions also affect gross payroll. Compensation records begin with time clock cards or other supervisor records for recording an employee's presence at a place of work. The Federal Wages and Hours Law requires that covered employees, but not so-called exempt managers and professionals, must be paid at a rate of 1 1/2 times the regular rate when they work more than 40 hours a week. What are some of the other things which may affect payroll? Right. In addition to the 40-hour law, labor contracts may require extra pay for weekends or special holidays. If an employee regularly is paid $4 per hour, he must be paid $6 per hour for those hours in excess of 40 worked in any established work week, even if he failed to work 40 hours in the preceding or following weeks. If Joe Brown worked 42 hours in a week, he would be paid at the regular rate for 40 hours and at 1 1/2 times the rate for 2 hours. Sometimes this would be expressed as 43 hours pay for 42 hours work. Just because an employee's pay is stated as a monthly salary rather than as an hourly wage does not necessarily mean the employee is exempt from the wages and hours law overtime provision, although nearly all exempt managers and professionals are salaried. Non-exempt but salaried employees are paid overtime by calculating an hourly equivalent, monthly salary times 12 divided by 2,080 work hours per year, and then multiplying this rate by overtime hours times 1 1/2. Employers are required to withhold part of employees' earnings for federal, often state income taxes, and for Social Security tax. In addition, employers often deduct sums for health insurance, pension funds, union dues, credit union loans, savings bonds, or charitable organizations. Who gets time and a half pay for work over 40 hours a week? Every employee must have a number assigned by the Social Security Administration. For those who don't, Form SS5 is used. The Federal Insurance Contribution Act, or FICA, requires the deduction and withholding of a specified percentage, recently about 6% of their earnings. Deductions for disability or unemployment benefits are sometimes made, although such costs are more often paid by the company. In every case, earnings records must be kept of the name, address, account number, periodic and annual earnings, payment dates, employment periods, and the amounts withheld. If a new employee has no Social Security number, what must be done? Right. Each payroll check should have some kind of earnings and deduction statement attached. In addition, there should be entries for the payroll on some kind of journal or register and an individual file of earnings and deductions for each employee. These journals, registers, and files can, of course, be maintained by a computer system. The first record of work is usually a time clock card or slip or a foreman's time book. The hours worked are totaled, multiplied by the hourly rate. Then an allowance for overtime is made by adding the product of half the rate times overtime hours, which added to regular rate pay gives total gross earnings. What are some other payroll records? Yes. The payroll journal or register will contain multiple columns for regular overtime and gross pay, as well as the FICA, federal income, and perhaps other taxes, along with various insurance, credit union, and other voluntary deductions. Where special columns are not provided, a general, other, or miscellaneous column with space for explanation is used. In 1976, for example, 5.85% of the first $15,300 of annual earnings was withheld for FICA, and a federal income tax withholding schedule was provided with separate tables for employees who claim various numbers of dependents. If Mark Johnson worked 85 hours during the first 2 weeks of August at a rate of $4 per hour, what would he have earned, including overtime for 5 hours? Yes. In this period, there were no bonus, incentive, or other special payments. Johnson has a non-employed wife and 2 children, so he had $27.30 withheld for federal income tax, in addition to the 5.85% withheld for FICA. How much is withheld for FICA? Yes. In addition, he had deductions of $10 for Blue Cross, $5 for savings bonds, and $2 for the civic charities, leaving him a net pay of $285.22. The other employees have similar gross pay and deduction records entered on their checks and in the payroll register. How would you find the total amount of FICA tax withheld from all employees paid for the period first 2 weeks of August? Right. The payroll register is the record of the earnings of all employees for a pay period, and it provides a means for finding the total amounts of gross and net payroll and the total of each of the taxes and other deductions. What record would you check if you wish to find several kinds of payroll information about an individual employee? Right. Here's a part of Mark Johnson's earnings record. He will probably not earn more than $15,300 during the year, so all of his paychecks will have FICA deductions. Notice the other deductions and extra earnings. Every time that an entry is made in records accounting, a chance for an error exists. For this reason, various methods have been developed to provide carbon copies or other mechanical or electronic entries from which calculations and records may be made. Some are specialized bookkeeping machines, and others are specially programmed, but general-purpose data processing equipment. This allows one-time entry. payroll and bookkeeping machine or computer may be located at the company's business office, or it may be at a separate service bureau company which provides a record-keeping and data processing service based on original data supplied by the company in the form of cards or tape. In general, how can errors be reduced? When bookkeeping machines, computers, or service bureaus perform the major payroll accounting steps, they are set up prior to payroll preparation with information about each employee. This includes name, address, number, pay rate, tax exemption claims, FICA status, and voluntary deduction data. At a given pay date, the regular and overtime hours worked and any special or change deduction charges are supplied by tape or punched card. These are fed to the computer in-house or picked up to be prepared by the Service Bureau computer for preparation of checks and records. In addition to reduction of errors, electronic accounting systems reduce accounting labor. The multiplying, adding, and subtracting required to calculate gross and net pay for each employee and for the entire payroll is done automatically and at one time. What final manual step may be needed? Yes. Each employee must be furnished a withholding statement, Form W-2, by January 31st of each year. This form shows the total amount of wages paid and the total FICA, federal income, and perhaps state income taxes withheld. Which box shows the total wages received? Every employee has a Social Security account number, of course, and every employer has a Social Security Administration identification number, too. This is entered on all reports which must be made to the Internal Revenue Service, which is the federal tax agency, and other agencies. One copy of each Form W-2 is sent directly to the IRS by the employer. 2 copies of W-2, 3 and states with income taxes, are given to the employee, and 1 is retained in company files. When do most employees get their W-2 forms? Yes. Wages are expenses, and expenses are a temporary equity account. The wage expense account is increased by entering as a debit the gross earnings of the employees each pay period. In a larger organization, the wage expense account may be further divided into production wages, office salaries, sales salaries, and so on. Amounts owed for FICA and income taxes withheld and other payroll withholdings, which must in turn be paid out, are recorded in various liability accounts. You recall that accounts for expenses are increased by debiting. But how are liability accounts like FICA, taxes due, or income taxes withheld increased? Right. Send such a payment and debit withheld income taxes payable. What do you credit? Yes. Similar entries would be made in liability accounts such as employees' insurance payable, employee charitable contributions payable, and so on. In the case of FICA taxes payable, and perhaps some others where the employer makes joint contributions, the accounts are credited not only with payroll withholdings, but with the amounts the company must also pay as FICA tax. The later offsetting debits when these taxes and the company portions are paid then include both amounts. The payroll register or the equivalent printout from payroll computer provides data for a general journal entry like this. Wage expenses debited and credit entries are made for FICA, income tax, insurance, and other payables, and cash. At the same time, a journal entry may be made for the payroll tax expense, which you should consider to be incurred at the same time as the payroll expense. It usually consists of the employer's FICA tax, which exactly equals the total of employees' FICA taxes, and the unemployment taxes divided between federal and state portions. This is how such a journal entry might appear. In posting the journal entry for payroll tax expense, you debit the payroll tax expense account with a total of FICA and unemployment taxes imposed on the employer, and credit the respective taxes payable accounts. What are they? Right. Of course, the FICA taxes payable account has already been credited with the FICA taxes withheld from employees' paychecks, so it now has equal amounts from employees and employer in its balance. The federal and state unemployment taxes payable accounts are credited when payrolls are made up and later debited or reduced when the taxes are paid to the two government agencies. Unemployment taxes are used by these agencies to pay compensation to persons who are unemployed and for administrative costs. State laws vary, so you should study your local regulations. Typically, a company may pay about 0.3% to the federal agency and about 2 or 3% to the state agency. FICA and withheld employee income taxes must be paid to the Federal Reserve Bank or other bank depository each month or for each payroll period for larger accounts. Final payments in each quarter may be sent directly to the IRS. A Form 450 depository receipt is sent in with the payments to be validated and returned to you. A Form 941 is used for quarterly tax returns. What taxes are being reported by Form 941? Yes. Here are T accounts for wage and payroll tax expenses and FICA and employees' income taxes payable and federal and state unemployment taxes payable. Notice how each of them are increased and decreased. Finally, even where records, checks, and reports are largely entered, calculated, and recorded by computer, there is usually a visible document which is first signed by a supervisor before a paycheck is issued to an employee. What is it?